Hey, what's going on, everybody? It is Monday, January 9th. All right, so we had kind of a mixed day in the market. Dow was down, S&P was down. Actually, they gave up some early gains. NASDAQ was up. I want to talk a little bit about last week. Finally, we saw Kevin McCarthy anointed to the post of Speaker of the House. It took 15 votes. He didn't give up, and he made a lot of concessions, and I'm going to talk about those concessions. In particular, I'm going to talk about one of the concessions he made, which is a little bit troubling to me. As you know, I've been saying unequivocally, actually, there's going to be no recession in 2023. And the basis of my outlook was really due to the expansion or the increase in the fiscal support that we're going to see this year. All right, I've been talking about this for a while. The interest income transfers, that's already adding up to some significant numbers. If you look at the discount on T-bills and new issues, even now, if you look at interest on Treasury securities year over year, it's up about 12 billion, where the discount on T-bills and new issues, that's up about 45 billion year over year. So, you're talking about what, 57, almost 60 billion. And again, it's just really getting started because we're only first starting to see interest on Treasury securities adding to fiscal flows. And of course, the other thing I mentioned was the increase in Social Security benefits. That's up. Well, the last Social Security disbursement on the 3rd of January, that check or that withdrawal was up like 10% over the typical ones we saw last year. So that was like a 24 billion compared to like what's normally around a 22 billion. So that's already starting to kick in. So anyway. And not to mention also the spending bill that was passed in December, the 1.7 trillion. There's a lot of outrage about that, and I just, again, that's just coming from people who really don't understand. I mean, we need that. I mean, here, let me just encapsulate this. I mean, spending by the government adds to the income of the non-government household and firms, who then use that income to consume, that induces the private sector to supply the goods and services that the demand, to meet that demand. That's the essence of capitalism, the profit motive. But here's what I want to talk about. I want to talk about the concessions, or the concession, that the one in particular that bothers me that McCarthy made. And that was basically not to raise the debt ceiling, or to, kind of limit or stop these endless increases in the debt ceiling. Now mind you, and I've been through this so many times. I mean, the debt ceiling, it's an anachronism. I mean, it goes back to the days of the gold standard. Like, I'm talking about like pre-Franklin Delano Roosevelt gold standard, where the government, was dependent on the amount of gold that it had in its ability to issue currency. All right. We're not on that anymore, but we still have the debt ceiling. So it's really something that is prehistoric. It should have been done away with a long time. But I understand that two things. Right now, it's used as a political tool, if you will. Both sides use it to try to extract concessions. And also, it's just mired in deep, deep fundamental ignorance. I mean, we hear it all the time. People saying, hey, look, I got to balance my budget, at the kitchen table. I got to balance my checkbook at the kitchen table. You got to balance your checkbook at the kitchen table. Why shouldn't the government have to do the same thing? So what's missing there is an understanding of the distinction between an entity that is a user of currency, like us, okay, and an entity that is an issuer of currency. That distinction is totally absent from any discussion, and we are still locked in this arcane and backward way of thinking where, the government has to balance its books. And the only way it could balance its books, I've been through this so many times, is to take back the net amount of spending. When I say net, it's like spending minus taxes and the amount that rests or resides in the hands of us, the non-government. That's the so-called debt. There is no debt. That's just dollars that haven't been taxed away. 32 trillion. I mean, to eliminate the debt would literally mean taking away that 32 trillion, which resides in the hands of the non-government sector, globally, United States and all throughout the world. I mean, that would create easily the biggest economic depression we have ever seen. But this idea of not raising the debt ceiling, and now, he had to sign off on this. I mean, he had to agree to these concessions in order, like he made a deal with the devil, basically. And this is going to be a problem. Now, I don't see this necessarily as a problem for this fiscal year, which ends September 30th. I mean, it might be coming towards the end. I mean, if I look right now at the financial position of the Treasury, where I think we're about 100 billion or so from the debt ceiling, and there's maybe 350 billion in the Treasury's account at the Fed. They're going to get tax deposits coming in March and April. So, and plus Yellen, if she needs to, there are extraordinary measures where she basically spends out of the pension fund of federal workers. All right, with the promise that it's paid back. It's all a bunch of shenanigans and it's all crazy, but it does have the potential to have a very serious negative impact. Now, again, I think we're going to be okay given, the distance we are from the debt ceiling right now, the amount in the Treasury's balance, the tax receipts that are going to come in March and April, and again in June, and Yellen's ability to tap into those extraordinary measures. But it's after that. I mean, if we don't get a debt ceiling increase by October, that's when things are going to start to get really, really scary. All right, and even though I said there's going to be no recession for 2023, I have to qualify that right now because, and we got time to talk about this, and there's good, who knows, there's a lot of things could happen between now and then. So I'm not in any way pushing the panic button, and I'm not changing my view. But I'm saying that this has to be on the radar now. I'm not even saying we got to wait until September 30th or the 1st of October. It has to be on the radar now just to see how these negotiations go. Now, the White House today said there has to be, a clean raise in the debt ceiling without any kind of equivocation or whatsoever. It's unlikely that the Republicans in the House are going to listen to that, all right? So we have to see how these negotiations are going to go. I still think that we're okay through September, given the numbers that I see right now, and how Treasury can kind of work around this and what's coming in from tax receipts. But this is a big deal, and I don't want to just kind of skirt over it. I mean, this is a big deal, and it has the potential for huge problems. And it's kind of like we've gone through this so many times. And I know I've been somebody who always said in the past, don't worry, eventually they're going to raise it, because they have to raise it, right? These are appropriations, these are payments basically already agreed to. They have to raise it. And of course, it's going to pop up again various workarounds like the $1 trillion platinum coin, but Biden's never going to go for something like that, even though he can. And the 14th Amendment, which requires the government pay its debts, okay? We've seen those things pop up in the past, and they've basically been ignored. Who's ever in charge, they want to go the way it has been going for decades and decades and decades. That is, Congress has to raise the debt ceiling. But I don't know. I don't think they're going to do it this time. And again, I think we're okay until the end of September. But after that, this recession, or the recession that is pretty much universally expected, Congress could definitely make that happen. And if there is spending cuts, austerity, to stay within the debt limit, and they're already talking about cuts to defense, which I said was like mind-boggling. I couldn't even believe that I was hearing that from a Republican Congress or a Republican House. Spending cuts to defense? I mean, I always said that was like an automatic appropriation, just like Social Security or Medicare or Medicaid. But apparently that's something on the table. Not that I disagree with that. I mean, I think the military budget, the defense budget is over bloated. I think everybody would agree with that. But I'm just saying, I was shocked when I saw that they put that out there on the table. But this is just a heads up. This video is just a heads up. I want to bring this up. It's on the back burner. Not so much on the back burner, just to say that, I am very, very interested, or focused, I should say, on how these negotiations play out. I don't think they're going to do anything immediately in terms of even starting to debate this. They're going to wait, but it's going to come up. And I don't know. This time, to me, it looks like they're just not going to raise it. So, we get through most of this year, or 3/4 of this year, I think, pretty much okay. I still have a positive outlook for the market. But then by the fourth quarter of this year and into 2024, and by the way, if this is a political tactic, because if the tactic is to completely derail the economy going into 2024, the presidential election year, it's going to work. Not that Biden necessarily had a chance, even if the economy was good. I mean, he's really, really old, and the thought of him running in a second term right now, I think a lot of people would be turned off by that. But I mean, to blow up the economy, this could be a political strategy, and it will work. I mean, there's no way that Biden or a Democrat's going to get elected in 2024 if this is their strategy. And this might very well be their strategy. So, look, stay positive right now. Buy the dips. Let's keep this thing on the radar screen. Let's watch. Look, who knows? Maybe they're going to come to an agreement. Maybe they'll do it. Maybe they'll realize they have to do it. It's the credibility of the United States. But in politics, as you know, anything goes. Anything goes. So that's basically the update for today. That's what I'm looking at. I'm not worried about this pullback in the Dow and the S&P today. For me, I'm focused on how these flows, how these fiscal flows evolve. I mean, I want to see now some acceleration this year, which I anticipated. As I said, we're already up to the average daily leading spending flows are the highest right now as they were on November 15th. And remember, November 15th, those flows were boosted by the quarterly interest payment. All right, we didn't even have the benefit of that now, and the flows are up to that. The average daily leading spending flows 34 billion. Actually, it's 31 billion as of Friday. We're right up there where we were in mid-November at the peak. I want to see that continue along that trajectory. That's the key thing. That has to continue along that trajectory, which I absolutely think it will. But anyway, I'll keep you posted. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. You know, I send out a lot of emails during the day, updates on the market, particular stocks, currencies, gold, all that stuff. So, see you guys tomorrow. Bye.